It's so powerful in sales or investing, telling someone no, they shouldn't buy this or invest with you. That way, when the next deal comes, I'm like, hey, you know what, Chris, these last 3 deals, based on what you and your family are looking for, this doesn't cut it. But with this upcoming project that I think you'll love.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back at the Fully Funded Show with Chris Larsen of Next Level Investments. I have the pleasure of meeting Chris a handful of times at mastermind communities, different events. So really been impressed with Chris and his knowledge and experience in the capital raising space. So I'll turn it over to Chris to give his own introduction himself.
Yeah, Sam, thanks. Great to see you, my friend. Chris Larsen, Next Level Investments. We also have Next Level Income, which you can check out at nextlevelincome.com, which is more of our investor-facing side of things. But I've been in the real estate world for more than half my life, which it's kind of crazy. The years just keep ticking by here. But I bought my first property at 21 and, started more on the single family side, built a little portfolio. And I had, now looking back, kind of a quaint idea of having a portfolio that I could manage myself and that would create about $10,000 of passive income on a monthly basis. So started down that path, and like most people that are young and start to get in this space, I don't come from money. Came from pure middle class family. My father passed away actually when I was young, when I was 5 years old, and my mother was an assistant school teacher, so she wasn't even a full school teacher for most of her career. And my stepfather, who she ultimately married, was a contractor. So I tell a lot of people I made more money my first year as a professional in sales than they did combined for a lot of years. But I got into medical sales, medical device sales. And I did that, Sam, because I wanted to continue to buy real estate. And, I remember reading Rich Dad, Poor Dad, and I went through, about 250 books on money, real estate, investing, business. And I put my plan together for financial independence in my early 20s, actually more like 20 years old. And Robert Kiyosaki said, become an accredited investor. And he also touted sales. And for somebody that had actually been selling stuff like wrapping paper since I was 12 years old, newspaper, had a paper route, these sorts of things, that was really appealing to me. And you can't probably see it all the way back on my wall, but I have a degree in biomechanical engineering. So when I learned about the medical device space and sales, and the fact that you got to go in and consult with doctors, with surgeons in the OR, I thought that was really cool. So I spent almost 20 years in that space, which really helped kind of shape the way that I work with clients today, because I got to work with some really sophisticated, frankly, genius, right? Like these are neurosurgeons, these are geniuses out there. And we ultimately moved into commercial real estate first as limited partners, Sam, and then did our first syndication. We started our business in 2015, my first partner and I, and we closed on our first deal in 2016. And now we're about 4,000 multifamily units in. We've done self-storage, we've done mobile home parks, we've done car washes, some office, some developments, short-term rentals, which I know you're a big fan of, all kinds of different stuff over the past 25 years.
Yeah, no, one of the reasons why I've been so excited to talk to you is we have really similar backgrounds in terms of both career and how we broke into the space. My end as well, started that single family portfolio, and I thought a lot smaller back then as well. And it seems like you did too, right? That $10,000 mark of how do I leave my day job? How do I buy myself that freedom? And then you realize that it's just not scalable enough, sell those off, move into LP investing. And now you become a deal junkie doing a whole variety of deals as a capital allocator. So I can speak to that space really well myself, but I wanted to kind of dig into the sales world, right? I think a lot of people who may be listening to this have a similar background to you or myself, right? They got into sales because of the autonomy, the upside, and really just leveraging their network, work ethic to go really scale and earn money to go invest passively or buy back their freedoms. So let's start things with the sales world. Like, what does that look like for you? And then also, how do you leverage your experience in sales to go out and raise more money in terms of your process? You're a very systems and process driven person. So really help us kind of unpack that as what that looks like for you and leveraging that experience you have to go becoming successful as you are today?
Yeah. Wow. Two great questions. So let's address kind of the scope of sales and what it is, and kind of what I learned in that arena, and then we can talk more about kind of how it crosses over into the world of capital raising. So if you're not in sales and you're listening, it's like you hear this cliche, right? Is which a great salesman could sell ice to an Eskimo. I hate that cliche because it's you're inferring that you're trying to get someone to do something that they really shouldn't do, right? Like, do Eskimos need ice? It's like, and I don't know, can we even say Eskimo anymore, Sam, in today's day and age? Like,
In
is that
terms of
like
being
offensive to somebody?
hopefully politically
I don't
correct,
even know.
I'm sure it
Yeah,
offends
right. I
someone
don't
out
even
there.
know. I'm sure it is. And you know what? I don't care. So let's start. Let's start there.
On the
But
same boat.
yeah, there we go. But really, what sales is, and we all sell, and you've probably heard that cliche before if you're listening. But we all sell because what sales is, it's just communication. And sales is really understanding your client or your customer's needs and seeing if you have a product or a service that can meet those needs. And that's where these, win-win relationships come in, right? But if you are a true sales professional and you want to have a sustainable career, and in medical device sales, the way it works is you go and you call on a doctor, you call on a surgeon, and your goal is to change surgeon behavior through the products that they're using to improve patient outcomes. And you sit down with this doctor, and it may be 6 hours, it may be 6 days, it may be 6 months, it may be 6 years before they ever use your product. So it's a lot of front end. But if you're not providing value and you're not doing a good job, they can start using your product instantly, switch products, and you stop making money. So, I worked through a process where I had to provide value on a regular basis or I was going to lose my business. So my view of sales is, can you understand the needs of your client? And sometimes they don't want to tell you those things. You have to kind of figure out the right questions to ask. And sometimes you have to spend a lot of time building a relationship to even have the privilege of asking those questions. And then seeing, do you have a product or a service that fills those needs? And frankly, there are times when, any good salesperson would tell you, hey, this isn't a good fit. Like, I can't do this for you. And if you've not been in sales, it's kind of like going on a date. You sit down with somebody, and if you're a conscientious person, you listen to the person on the other side of the table from you, and you're like, well, is this person a good fit for me? And you ask them a lot of questions because you want to understand who they are as a person and understand, is this a good fit for me? And then maybe you share a little bit of information about yourself. And as a lot of people know, most people have probably gone on a lot more dates with people than people that they've ultimately, spent long-term relationships with. So again, sales is really, identifying the right individuals that might be a good fit for your product or service, building the relationships and ultimately having those conversations with those individuals, and then ultimately seeing if you can provide that need. And then, of course, there's the back-end communication and service, if that's involved, to make sure that you're providing them the ongoing support with that product or service that you have.
So this is a really important piece of sales knowledge for those who aren't familiar with the sales world. I think sales at times can get a bad rap in terms of being sleazy, or you're looking for a win-lose scenario in your favor. But I think how Chris explained this is that you're really digging in and seeing, does your solution make sense for problems that they have or that they may not know they have, which is the bigger win for both of you in that sense as well. So I think it's a really good way that Chris kind of walked us through that as to what does sales actually look like, what goes on. And a question I have for you as well, we can kind of go back shortly to how does sales apply to raising capital. But actually, I sent out a deal recently to my investor base and got a response that said, hey, I'd love to be involved, but I only have $5,000. What should I go do? Or like, how can I get involved? And I'm curious your take on this. My response was, if you only have $5,000 to go invest, say you're making, I think he's making between $60,000 and $80,000 per year. One, we can't take that capital because of SEC regulations. But that aside, if you only got $5,000, $10,000 to invest, my take, and I told him, hey, go spend that money on education. Go figure out a way to level up your income, right? So I got a lot of, I think I made a post on LinkedIn recently and got a lot of mixed feedback from people on that. So curious your take on someone who's starting out. Do you go invest early? Do you go invest in your education early, right? How do you really help people level up their income, level up their investments in a way that makes sense for them based on their situation?
That's a great question. And this goes to, if you're a salesperson, and most people have heard of the Pareto principle, or the 80-20 rule, where 80% of your business comes from 20% of your customers. And this rule can be applied in a lot of different areas in life. But essentially, if you strip all that away and even the numbers, you just have to ask yourself, am I spending the time doing the right things in my life? Am I spending the time as a salesperson talking to the right people? So, let's apply it to, what my career was at the time in medical device sales. So let's say there's 10 surgeons, and, there's probably 2 of those surgeons that are the busiest surgeons that probably do about 80% of the surgical volume. And, these numbers don't have to be exact, but let's say out of the 10 surgeons, maybe there's 5 surgeons that do 50% of the business, or I'm sorry, 80% of the business, right? The issue is, like, are you talking to the right potential customers? And, I would, to kind of play devil's advocate, Sam, this person probably shouldn't have gotten that email in the first place, right? Like, they're, why are they getting that email? Why are they, even finding out about this deal? And look, we have a lot of people on our mailing list that, might not be qualified to invest. So we have to go through that first phase of, hey, are you qualified? And this gets into, some of the things we learned and kind of some of the systems that we follow, right now. But that's one of the things that we ask, is some of those hard questions. Hey, Sam, how much money do you make? What is your net worth? How much money are you planning to invest over the next year? And I'll get into kind of like how we kind of move investors through that process as well. But ultimately, I agree 100% with you. I think that if somebody, I had a friend call me, he made about $300,000 a year, and he wanted to invest. And we talked, and he had basically no money in the bank. This was a few years back. And I said, hey man, like, look, yes, we could take this $50,000. You could invest this money with us. But I got to be honest, like, if you have $50,000 in the bank and that's it, you should not be investing yet. Like, go and build kind of those building blocks. And the base of that pyramid is, in my opinion, what you just said, Sam, is education. And that's how Next Level Income got started. And, that's like, we give our book away. So if you go to our website, nextlevelincome.com, even if you're not an investor, even, you can get a copy of my book, you can learn my story, and you can see the process that my team follows after you get a copy of that book. And people will say, well, Chris, why would you spend the money giving away a copy of your book? What if people that aren't qualified to invest get it? Well, 2 reasons, Sam. One, I really like it when somebody goes to my website, listens to a podcast, reads a blog post, gets a copy of the book, and gets value out of it. Like, that gives me fulfillment. Okay. Hopefully it helps them on the path. 2, maybe they read the book and they're a good fit and they have money to invest. That's good for my business. But what if they read the book and they're not a good fit and they don't invest with us? Well, that's also good for my business. And here's why. It costs me about $7 for every book that I send out. That's the cost of the book, the cost of the mailing, the cost of labor. Okay. About $7. We typically spend about a half an hour on the phone determining if an investor is a good fit, going through what we do, asking them questions. Maybe it's not a full half an hour, but that's about how much time we have to block off in our calendar with switching time and all that stuff. What if I can save myself or my team 30 minutes of our time? Okay. So even if you pay an assistant out of the Philippines $15 an hour, you're still better off spending the $7 to save 30 minutes to do that. So if somebody gets the book and decides they don't like us or they can't invest, that's a win. If somebody gets the book and it helps them move forward, that's a win for us. And hey, if somebody reads the book and says, hey, this is a great fit, I've learned a lot, I want to work, with Chris or his team, then that's a win as well. So, again, our process helps sift through this. And again, it helps, kind of, I guess I'm saying I put my money where my mouth is, which I help people with their education because I believe firmly that, that's going to be good for them. It's also going to be good for our company as well.
Yeah, it's really smart. I think the book does a few things, right? One, helps weed out people that may not be a great fit to go work with you, and therefore saving your team's capacity to go work, right? Second, it helps give a level of credibility to you as well, right? I'm sure you've seen that shift. Be like, hey, go check out our book. That goes a long way in terms of investor perception that you've sat down, taken the time to write, edit, publish a book like that. But third, probably also helps feed your investor base as well of people who may want to work with you, right? So I think it does a lot of things there.
Absolutely. Yeah,
So
absolutely. And look, frankly, when I set out to write the book several years ago, I wish I could say, yeah, I thought about all those things, Sam, and this is exactly why I wrote it. But I wrote it because I thought it would be a good educational resource, and my director of marketing at the time suggested it, and I was like, oh, I can like piece this up into blog posts and stuff. We were just looking for more content to get out there, but it's been a very valuable tool for all those reasons that we just mentioned.
So someone who's thinking of implementing writing a book into their
Yep.
sales funnel, their background, can you give us estimates on how long it took you? What was that lift in terms of expense that it took you as well to get this started? Right? 'Cause I think a lot of people have had that thought of, let me go write a book. So now that you've
Yeah.
done it, have the experience doing it, if you want to share some info on, and these can be rough general numbers, like walk us through the logistics in terms of time and cost in doing so.
Yeah. So first off, like I'm not the kind of person that's like, oh, everybody should go out and write a book. Although it's now that I've done it, I would certainly say it's very valuable. But somebody that's analytical, that's numbers oriented like I am, it took me a long time to even be like reasonable with writing. So I spent a lot of time learning how to write better. I took courses in college on technical writing and joined Toastmasters, which a lot of people may be familiar with. Which, yeah, it's about speaking, but it's also about writing and doing that. So first off, I think the ability to take your thoughts and ultimately put them into words to communicate is a valuable skill in and of itself. So I think it's very good. Obviously, you have ChatGPT now and a lot of different things that can assist in that process, but I think that's valuable, even if you don't write the book. Number two, what is the time and cost? So it's going to vary for everyone. The actual time it took me to write my book, like take the words in my head and put them on paper. And we teach this to our coaching clients, which is, how do you find your most productive hours of the day? And I'm not lying and I'm not exaggerating when I say this. It took me 2 weeks to write my book. And that was with a full-time job while I was on call. So it took me 2 weeks. How do you do that? There's a process to follow. And I kind of reverse engineered it at the time, and now there's people that can teach you how to do this, and people that'll help write your book. You can look up ghostwriters. You can look up the book or the company I worked with. I think it was called 90-Minute Book, something to that effect. And if you want to write a book and you want to know, reach out to me, Chris@nextlevelincome.com. And I'll send you some resources there. But what I did, Sam, was it's kind of how I do a presentation. I do an outline and then I put bullets and then I speak. I don't try to memorize things, and I definitely don't read from a script. So I said, all right, let me outline the book and let me put kind of like my bullets for the chapters. And then every night before I went to bed, I looked at the next chapter that I was going to write, and I kind of thought about what was going to go into that. And then I literally got up, I got a cup of coffee, I closed my eyes for a few minutes and meditated, let my brain slow down, and then I wrote for 90 minutes. And that's how I did it. And I was just authentic, and I didn't think too much about that. Once it was written, I had to send it off to get edited and, some illustrations and published and all that. And that took about 2 months. So to write a book, it's probably going to cost you, depending on how much of it you do yourself and how professional you get, and if you do any, if this is like without promotion, I would say it's probably going to cost you $5,000 to $10,000 is probably a good amount of money. 5,000 is probably not a bad estimate. 10,000 if you kind of employ some higher level professionals and do that. But mine's a short book. It's 100 short pages. Probably about 50 written pages on that. So it's not a long book at all. And that's the other piece. If you want to write a full length book that's a couple hundred pages, it's going to be a New York Times bestseller. That's certainly going to be more like $10,000 or more dollars to do something like that. But if you want to self-publish as we do, and you want to put a short book together, one of the things, probably the biggest thing I get, aside from, hey, your book was valuable, but people say, hey, I liked how easy it was to read your book. I finished it in 2 hours. And I wanted a book that somebody could pick up, because 90% of people that start a book don't finish it. So, I want something that people could pick up. And like we're just talking. I'm going to be flying up to Boston here later this week. You could read this book on the way from Florida to Boston or New York. And Sam, if you can't finish it in a one-way trip, you could probably finish it on the way there and back. And I certainly had people that have reported that. And then I also published an Audible version, an audiobook version. And I will tell you, that's a lot harder to do. I've done a few, more than a few hundred podcasts. I've probably done 400 to 500 podcasts here in the past 5 years. And when I can tell you that talking like we are today is a lot easier than speaking perfectly at the perfect cadence, without ums and ahs and stutters on a book. And that took me several sessions to get through my book. And it was certainly surprising how much energy that took. And again, that $5,000 number at that lower level includes a written as well as an audiobook.
Cool. And I think something you do really well, which I think highlights a lot of your background in sales, is how simply you explain things, right? I think we've all realized, especially in the sales world, and whether it be reading, talking to investors, networking, simple is good, right? Where people can understand, digest what you're sharing, and really feel as they get it in a quality way. So love the book idea. I think it's a great idea for people who are slightly more advanced in the space, really to go help with brand recognition, to go help with credibility, help on the education side of it. And again, it's content that you can use over and over and over again, right? You can go carve up into articles, blog posts, promotional pieces. So very big believer personally in things that you can do once and leverage time and time and time again. So
love that.
Now when thinking of leveraging your sales background to really tie into raising capital, because you've raised $100 million plus so far in the last handful of years?
Yeah, crossed $100 million last year. And that would be over the span of, I guess, approximately 7 years, Sam. But yeah, that first year, it was less than $1 million. The second year was a couple million. And it's interesting, it kind of went exponential. It was like $1 million, $2 million, $5 million, and then it jumped to 20 and then upwards from there. So we've raised, the Pareto principle, right? We certainly raised 80% of that money in the last, 20% of the time, last couple of years, certainly.
So I think that's another huge piece as well, is that this business, when looking at raising capital, is that it's so important to do it for a long period of time. One, because your compensation typically is back weighted, as your incentives are hopefully aligned with your investors, as when you make them money, you get compensated as well for doing so. But also just showing you the impact you can have in this business if you do it for a long period of time, right? Your business scales with you. You have investor loyalty. You make new connections, referrals. You also have deal cycles too. And I'm sure some of these deals you started with may have exited and had investors roll their capital back into new deals by you doing right by them.
That's exactly right. Yeah. Yeah, that's a great point. So, there's a lot of pieces to that. But I think first off, if you go back and you look at one of my favorite books is there's Grit, there's Mindset. Two of my favorite books that I read kind of as I moved into leadership. And I think it was Michelle Duckworth in Grit that wrote about what is the number one predictor of success, especially when you look at, younger individuals. So this ties into your point, Sam, which is like, how do you explain things succinctly, right? Make it easy. I have 2 boys, they're 12. And by the time this airs, about 14. And I want to think, hey, can I explain this concept to my young sons? If I can do that, then that's probably going to be easy to understand for, a middle-aged professional that's out there, right? And even if you look at elections, like people talk about Donald Trump versus Hillary Clinton, Donald Trump used language and terms and concepts that were simpler. Now, some people may ridicule him for that, but the fact of the matter is he was successful because of that as well. You don't have to be super fancy with your writing or your terms and all that. You certainly need to be sophisticated enough to understand what you're doing, but you should be simple and straightforward, when you're talking to investors. I think that's a good thing. And then take a long-term view. So Michelle Duckworth talked about what's that number one predictor of success. Do you have a long-term vision of what you're doing? Do you want to become a professional athlete? If you're a 14-year-old kid, you want to be a pro athlete, you're going to be willing to run through wall after wall after wall compared to somebody that just wants to play baseball for a couple of years. Same thing if you're a musician. So if you want to go raise $1 million, don't go start a business where you're going to raise capital. I don't think that's worth it. If you want to have an impact like you're talking about, Sam, and grow a business, like a true business where you're going to raise 10, 100 million, $1 billion, then you're going to be thinking in terms of systems and teams and quality to do that. And that's something that I looked at when I was in the medical device space. I had a very large business. I had to service a lot of surgeons with very precise equipment that had to be sterile. It had to be in perfect working order, and it had to be in the right place at the right time repeatedly. And how do you do that? You do systems. So how does that translate? When you're dealing with investments, you certainly have to have the right systems in place as well. But also, let's talk about it from an investor perspective. What's the most important thing that investors want aside from performance?
Likely character, trust, communication, right? They want to be able to go believe
Yes.
the person they're working with is going to do right by them in any situation. So for them, the
Yeah.
stability side of it, the trust,
Yeah.
yeah.
Yeah, I think you nailed it. Character, trust, and then you said communication. And communication is how we build trust, right? And how people understand your character. And that goes back to why sales is a good background for this business, because it ultimately comes down to understanding who you're working with and communicating effectively with them. So that begins with actually communicating and saying like, "Hey Sam, like what are your investor goals?" So if you're looking to raise capital, I think kind of, again, I'll use an analogy, which isn't necessary, but I think it'll highlight my point. I would go with my new reps that I was working with when I was a manager and I was in a leadership role, and we'd sit down and we'd say, "Hey, Dr. Silverman," and Dr. Silverman would say, "What do you have to sell me today, Chris?" And he'd expect me to, pick up that device and start talking about it, as if it was like this pen in my hand that I'm holding, if you're just listening today. And I wouldn't talk about our products at all. I'd say, I got nothing today. And Dr. Silverman would look at me confused and be like, "Why are we sitting here?" I'd say, "Dr. Silverman, I want to learn about you and your practice and your goals." And I would say, "Hey, what's your practice look like?" And Dr. Silverman would tell me, say, "What are your goals? What type of procedures do you do? What type of payer mix do you have?" I'd learn all of this stuff. And then and only then might I say, "Hey, here's this product or service that we have that may be a good fit." And what is that fit going to do? It's not going to give you something to put in your hand. It's going to help you, Dr. Silverman, achieve the goal that you just told me that you wanted to have. So we found that was much more effective. And a lot of the people that I reported to were like, "Chris, you go and you have a conversation, and next thing you know, the surgeon's using your stuff. Like, how do you do it? What's your sales technique?" It's really not a technique. It's not a technique. It's just we go and we try to genuinely find out. So if you're talking to an investor, my advice would be find out what's important to them. Why do they want to invest with you? Don't tell them about how great your deal is and how you have 30% returns and all this stuff. Find out, do they have children? Do they want to, are they investing for their children? Are they like, I have a good friend that's been a multi-time repeat investor, and he has a son that has some the mental challenges, and he's using these investments to grow income streams for his son so that his son can ultimately be taken care of. That's very powerful, right? So, that's something that I know is important to him. And we want to make sure that ties in with the investment opportunities. Does he have, what are the timelines? What are the risk factors? Do your investors already invest in real estate? People like us, Sam, we like to talk about how we're not big fans of the stock market. And frankly, I have almost no money invested in the stock market right now. And we can go on and talk about that. But when 80 or 90% of your investors have the majority of their net worth invested in the stock market, don't make them feel like idiots for investing in the stock market. So we used to say, in sales, don't call your customers baby ugly. You don't walk in and say, "You're an idiot for doing this, Dr. Silverman. You should be doing what I'm telling you." No, say, "Oh, that's, okay, terrific. Here's how what we do can actually improve what you're already doing and make it a good fit." And then, ultimately what I like to do is kind of like, I forget who said this, but, don't go fish if you watch a grizzly bear hunt salmon, what do? They walk into the river and they literally stand there with their mouth open, and the salmon jump into the grizzly bear's mouth. Go where your customers are. Don't chase your customers. The grizzly bear's not swimming out to sea with the salmon. The grizzly bear waits till the time is right and the salmon are coming upstream, and he just waits. So be confident in your product, grow your customer, your client base, and then don't be impatient. I have an investor. He followed me for 3 years. He read all my stuff. I had no idea. He never reached out. He never called me. He never emailed me. Until one day he did. We had a conversation. He invested $10 million that year. So just remember that, just because somebody says no, you have to meet them on their timeline. And that takes patience as well. So all these systems that, I've been kind of alluding to, are put in place to make sure that you can control what you can control and you have that information. So when you have those conversations, but we have over 1,000 investors. So when Sam calls me, I can say, hey, Sam, how's Tampa? How was the basketball? When was the last time you went to a basketball game? Because these are things that I know Sam, I know Sam lives in Tampa and I know he likes basketball. Talk about these things. And then the investments, let your clients come to you with the questions they have and then answer those. And the final thing is, don't oversell. In Tommy Boy, you remember Tommy Boy where it says, oh, that's when I kill my sale. If an investor says, hey, Chris, I'm ready to invest, I say, great. Here's the process. Don't keep selling them on that process. When they're ready, take them at their word that they're ready. And then once you're done, then you can communicate. You can over communicate with all the information on the back end. But if you've done all that work getting an investor to the point where they're ready to commit, help them through the process, take down the barriers, make sure it's easy, and then focus on the back end communication.
Yeah, there was a lot there. I think one big piece to go start with was
maybe too much. Maybe I didn't simplify that one.
No, you're good. I think I hit on a few different pieces of this. But first, when thinking of applying sales to raising capital, you made a great point of don't go demo your product the first second you go meet someone, right? We saw it in, I led more high volume type sales teams, more transactional. And digging into a level of discovery still, most people would hop on a call as a customer or potential customer. What do you got, right? Show us your demo. What do you have to go sell me? And the people who actually took the time to go do discovery before that, right, they can go tailor their offer much better to their potential customer, right? So you're positioning yourself with information versus just taking a call, running through a script. So I think that piece of it is really helpful in understanding that side of it. Also, right, I know Chris falls into the capital allocator standpoint as well, doing a variety of deals, different types of asset classes. If you fall into this capital allocator type realm, like myself or Chris, it's hugely valuable to be able to understand how your potential investor thinks, because that way I can say, hey, Chris, with this deal coming up, these 3 things are probably why you don't like it. I want you to pass on this deal. It's so powerful in sales or investing, telling someone no, they shouldn't buy this or invest with you. That way, when the next deal comes, I'm like, hey, you know what, Chris, these last 3 deals, based on what you and your family are looking for, this doesn't cut it. But with this upcoming project that I think you'll love for these reasons. It's much more powerful telling someone no. What you'll commonly see then is someone trying to go sell you why they're actually a good fit, or it happens more often than not. But if you're in that capital allocator type space, do a variety of types of deals in terms of asset class, operator, market, structure, you have the flexibility to go sell against yourself in a way that helps position investments far better for your investors. So huge takeaway there. And again, the systems process, when thinking of this as a long-term business, is huge. Like, I think you made a great point in saying that $1 million, you can go grind at $1 million. May not be a fun process, may not be easy, but you can grind at $1 million. If you start adding zeros to your goals, your thought process and how you get there dramatically shifts, right? I had this conversation recently with a good friend of mine. He's a local realtor, right? Just kind of starting out. I think he sold $8-9 million of homes this last year. And we were talking at the start of the year. I'm like, okay, what are your goals this year? How much do you want to do in sales volume? He's like, probably 15 million. I'm like, okay, add a zero to that. how does it go change how you think about your process and what you do and how you allocate your time? So again, I know you made the point earlier too on really finding out those peak times of productivity for yourself. Like I think of this just overall peak headspace and doubling down on those times and systems and process to allow yourself to get to those bigger goals.
That's right. I love that. And then, yeah, and then that's those systems. And we look, our whole process, what we call it, and Sam, I know we talked about this before, but our team calls it automated authenticity. Okay. And what does that mean? So my uncle, he calls me every year on my birthday. He calls all my kids, he calls my wife every year. And I think he's my only family member and only friend, anybody in the world that hits it every time. He actually called me a day early last year, so I joked around with him about that. But why is he doing that? So he's authentic in his desire to wish everybody a happy birthday. How does he automate it? He has his calendar. So when that calendar flips over, he knows every day he sits down when he gets home from work. He goes to work at 5 a.m. for Coca-Cola. He comes home and he sits down. He calls everybody whose birthday it is that day. He's authentic in that. He's a very authentic individual. Does it make him inauthentic because he has a system to remind him to call people on their birthday? No. So if you have a system to remember that Sam lives in Tampa and he likes basketball games, and we can talk about pieces, things that are important to your family as well, but we won't jump into that now. But if you know it's truly important to these people, so when you have that conversation, you can remember that, then that's gonna allow you to have a more authentic conversation with that person. You're not going to have to be fake because you can actually have that. So again, we call that automated authenticity, and that's making sure you have a system to process that information and then recall that information and then actively, utilize that information while you're working with investors. I think that's very important to do.
Yeah, agreed. Having those things and making your life a lot easier will dramatically help you to scale your business, especially because this business is so scalable, right? If you're looking at growing and building your investor list, what I've found, I'm curious your take on this as well, Chris, is that once you have someone on your list and once you've had that meaningful first conversation with them and they keep seeing your content regularly, whether it be through a podcast, through articles you write, through social media posts, they get more and more bought in. And especially if they actually invest with you into a deal, you communicate well, you perform well in terms of actual deal metrics, right? It's very easy for that person to say, hey, you know what? I've had a great experience with Chris. I want to keep investing with Chris in his new deals. So what that means is that your base can keep growing with people and you keep adding new top of the funnel in terms of net new investors to your list, which is likely why Chris's numbers each year have grown dramatically, right? It's exponential. Think, for example, if you start at $1 million a year and then you double it, and then you double it, and you double it, and that base keeps staying, right? You can grow your business in a dramatic way. And over time, it's so important to go do so because that scales in a huge, huge, huge way, which is why I think Chris made the point of, if you're doing this for $1 million, don't build a company around it. But if you're going out and looking at how can I go raise $100 million or $1 billion, you think much differently about relationships, systems and process, partners, etc. Help you go grow your business in that sense as well.
Exactly. And look, the point you made, Sam, I worked for State Farm 20 some years ago, and I drive down the highway still and I see, the State Farm agent's picture up on a billboard. And it's neat. Whenever I meet one of those individuals, it's kind of like I'm meeting a celebrity. They're a State Farm agent, but it's kind of cool because I've seen their picture, 100 times because I've driven by it every day. That's, why is that? It's just because, I'm becoming more familiar with that person. So when you have a book, when you have a podcast, when, you have your picture attached to your emails, like you said, Sam, people come to know you, right? They get to see you. They feel like they get to know you a little bit. And that's going to help you with that process. So if you have this information that you're sharing because you say, hey, I'm going to talk to 10,000 investors. When I started out, I could talk to every one of my investors every day. Today, I don't have the time to do that. I can't keep up with all of our new investors and our current investors and our partners. It's impossible to do that. So I have to have systems. I have to have team members in place to automate those processes and do that. And ultimately, that's going to mean that they get better service. So would I rather work with somebody that has systems? They're going to be able to service me in a timely fashion, in a very repeatable fashion? Or would I rather work with somebody that is a single person that has a single point of failure. So it tells you a lot about the type of person you're working with as well, if they have robust systems around them to help service the business that you're doing with them.
Yeah, so a couple of things there. I think one, when looking at the more content and social brand you have, the more roots you have when speaking to investors. I'm sure people at times have gotten on calls with you and you're like, oh, you're the Chris Larsen, right? They get on a call with you after listening to your podcast, right? They feel as though they know you already in terms of how you think,
Yep.
how you operate, who you are as a person before you get on that call. It makes that, introduction call a lot warmer when you talk to someone in that sense.
That's right.
But also when you go think of, who you pick as partners, right? To the capital allocators out there or the actual operating companies looking for capital partners, the more team you have, right? The more you operate as if you're a company versus two dudes doing a deal or two girls doing a deal, right? You perceive a lot better to the market because they know that there's systems in place, there's process there, there's likely salaries in place to help people stay put as well, right? So I think you see these things and you can feel your execution risk, both in terms of deal performance, but also investor experience, are far higher, right? I'm sure you've worked with people in the past
agreed.
that you may have not chosen to work with again for the reason that they didn't help in one of those two areas, right? Either the deals didn't perform well from their own doing, or the experience that they gave your investors was subpar and therefore a poor reflection of you. So when thinking of who you go partner with in your deals, this is so crucial, as a lot of the deals we do are give or take, call it 5 years, where if you have someone invest into a deal, you don't wait 5 years for them to go reinvest into a subsequent deal, right? You want to make sure you nail the experience piece of it for them so that they can go reinvest into a new project with you.
That's exactly right. Yeah, that's a great point. All this being said, I think you put all these systems in place, you do all the right things. Remember, there's two final pieces. All right. I was actually talking to one of my team members about this today. When somebody's ready to invest, we mentioned this earlier, take down the barriers, close that individual. Say, hey, here's how to do it. Get that money in the door. Make sure you do that final piece. Don't leave that final piece up to chance. That's no way to handle that. And then the other thing is, before they do business with you, just like, remember going back to the date analogy, Sam, if you're sitting across from somebody and they're like, hey, you're going to open the door for me, you're going to take me out to dinner, you're going to pay the check, you're going to do all this stuff. Those are some red flags probably if you're a guy and you're taking a girl on. She's just like, give me this, give me that, give me that. And then it's like, hey, I'll call you and tell you when I want to go out next. You're like, that's kind of weird. That's a one-sided relationship, right? It's okay, even though you're asking for money and maybe you even need that investor's money to get a deal done. It's okay to explain to them your process and what you expect from them. So that's my final piece of advice. As you're working through the process with your investors on the front end, explain to them. Say, so Sam, here's what it's going to look like when you see a deal from us. You're going to get an email. It's going to say this. You're going to go down and this is what you're going to do. You're going to click on this link. You're going to email this. You're going to make this phone call, whatever your process is out there. And you're going to get 3 days to review the documents. And then we're going to need you to wire the money or send a check within 48 hours. Because if we don't have your money, we can't close the deal. If we can't close the deal, we're not going to have any more deals. If we don't have any more deals, we have nothing for you to invest in. So it's a team aspect, right? And it's okay to have expectations in doing that. Going back to my prior career, I had a lot of surgeons I worked with. Sometimes I'd have 6 surgeries going on at one time. I had a surgeon, he goes, Chris, when you work with me, you don't leave the room. Spine surgeries can go on for 2, 4, 6 hours. I said, I'm sorry, Dr. Silverman. I said, that's not how I work. And I explained to him, that's not my process. And I said, here's why you should be happy with that. Because even if I'm not in the room, here's why you should be confident that everything's going to go right. Because I trained this person and that person and this person. So it's not just one point of failure, Chris Larsen. You have 10 people that all know how to do my job, and they're all going to take care of you. And if you have a question, that means I'm probably going to be able to walk in and answer your question because I'm not stuck in another surgeon's room to do that. And at first he's like, well, I don't like that, but he kept doing business with me because I explained to him that this is a two-way street and this is a partnership. So again, don't be shy. be upfront, be a professional, right? Don't be a dick, be a professional, and explain how your process is and that we're all working together to get this done. And I think if you treat it like that, you start off in the beginning, you treat this as a long-term endeavor where you're building long-term relationships. You put the right systems in place, you communicate effectively, and you have respect for yourself, your team, as well as the investors that you work with. To me, that's a winning recipe for success right there.
I agree. I think people, when they first kick off their career in whatever field they're in, they tend to allow prospects and customers to bully them to a point, right? In terms of the level of desperation or need of their business. I think as you start to grow, putting in those boundaries, putting those process, and helping explain to people how you work and why helps buy yourself that time back, helps allow you to actually go focus on growing your business. So something at first I know people have a tougher time with of telling people no when their only goal is to grow their business. So putting in those boundaries, those guidelines, and how to work together goes a long way in terms of respect and credibility mutually. But Chris, thanks for coming on today. Really helpful to dive into your background, the sales world. So super excited to get to talk. Again, I know you mentioned it a few times. We'll put in the show notes as well. How and why should people reach out to you?
Yeah. So if you want to see how our process works with your own eyes and you're listening today, go to nextlevelincome.com. You can check out our website, get a free copy of my book. Hopefully it provides you some value. It provides a little insight into my background. You can just click on the book link. It'll pop right up there. And even if you put your address in, you'll get a copy. You can watch through the follow-up and do that. But if there's anything that I mentioned today and you're going out and you're building your business and you need some assistance, Sam, I know you have a phenomenal network. I know you have a phenomenal program that you've put together. I love that you're adding this podcast to it, but you can also reach me to assist with that. Chris at nextlevelincome.com. Chris at nextlevelincome.com.
Cool. Thanks again, Chris.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.